Hello, guys. What is happening? And welcome to today's stream. So, breaking news if you haven't heard, inflation in Canada ripping to the high side again, nearly 1% in January, 1% in 1 month. So, we're going to get into the nuance of all this sort of stuff and what exactly is going on. This is not just a problem here in Canada, it's a problem in the US as well. So we're going to go through quite a few things. And then at the end, I have some stories from people. It was somebody who emailed me today, reminded me of another story that somebody sent me from Nova Scotia. And then we've got a story from somebody who builds houses. So stay to the end and we'll hopefully whiz through this. But I have a lot of stuff to go through here. So let's get my screen shared. Hello, Gloria. Hello, Trent. Kevin. Okay. Oh, let's see what I got to do. Okay, this is what I want to share. Okay, perfect. So what I'm going to do, we'll start off with Canada core inflation. Let me make this bigger so everybody can see it. Okay, so basically, if you take a look at this inflation rate, you can see that it is absolutely skyrocketing, guys. It is higher than it was back during 2006, 2005, during that boom, and it's getting up to the late 80s, which is funnily enough when another bubble bursts. Now, you have to remember back in the late 80s, there was a lot less debt than we have outstanding today. So inflation is putting a massive squeeze on households, and we really, really need to look at this more closely because it's extremely important. And that's why I'm covering it today on this video. A lot of people are going to say, like they're going to say, oh, well, Luke, inflation it's a worldwide thing. Everybody's having the same problem. And that's just not true, as we're going to go through quite a few examples right now. So you can see clearly this is exploding to the upside. We had a little bit of disinflation during November, December. And I said in my December video that we're gonna be keeping an eye on this because this is a leading indicator of how much the economy is going to collapse by, because it cannot be sustained. And to be honest with you, inflation has already destroyed the economy. It's just going to take a little while for that to come out. So anyway, let's move on now, and let's first go to Switzerland. Okay, so you can see, I think if I max out this chart, okay, so you can clearly see that Switzerland is not in the same situation as Canada. Let's switch between Switzerland and Canada. So look at this. They've had low inflation. Yes, it is higher, but it's under 2%. So to say this is a worldwide thing, I don't think so. We're looking at inflation compared to when it's been in the past with these countries. So the fact that it's under 2% is kind of irrelevant. Is it high compared to where it was in the past? So with that in mind, let's switch to Mexico, because Mexico is part of North America. So if it's a issue in North America, if it's a North American issue, surely Mexico is having that issue. Let's have a look at Mexico. Look at Mexico's inflation rate on on a long-term basis. I mean, yeah, they had, looks like it's nearly hyperinflation back there, but you can clearly see that inflation in Mexico is relatively stable compared to where it's been in the past. It's been in this place before. They got a little bit of disinflation going on right now. So you can see, and yeah, Gloria, the last housing crash was in the 90s, not 2008 in Canada. But if you look at this inflation rate, just extremely low, again, Mexico is another example of a country here in North America that is not experiencing the ridiculous inflation that Canada is experiencing compared to where it's been in the past. Look at this. We're going back to 1989 levels. Mexico, nowhere near there, nowhere near. And another one I want to go into is India. So India is another great example of a country that, in my opinion, has actually lower inflation than Canada. And if you look at inflation in India, again, like it's been higher before, back in 2020 and such. So it is kind of showing you that the inflation exploding well beyond the historic trend line is not a is a unique issue in some respects, unique to these countries which provided unbelievable amounts of stimulus and lowered interest rates to the floor. Now, Switzerland is a example of where per capita GDP is much higher, but Switzerland is a great case that we should go into in a entirely separate video. We've got too much to cover to really go into that. So let's go over to investing.com right now, and I'm going to blow this up so I can show you, and let's get rid of some of this US stuff. So sorry about the ads. These are just the preferences I have. And then you can clearly see what's going on. Okay, so you can see here the core CPI month over month in January was 0.8%. And it was forecasted to be zero. So the fact is, that is a huge miss in terms of forecasting. And it wasn't just on the core CPI. It was also on the CPI month over month, which was nearly 1%, which is just insanity. And funnily enough, another thing was wholesale sales. Look how far amiss wholesale sales were. It was forecast to be 2.7%, and it was just over 0.5%. And if you look at wholesale sales over the past time frame here, you can see it's very weak. Wholesale sales measure the change in the total value of sales at the wholesale level. It is a leading indicator of consumer spending, and that is very important. And as you can see here, it's slowing down. So let's close some of these down now, so we don't get. So this is the CPI month over month, so you can see it just in a different way. But the fact is, at this level, I mean, this is just absolutely insane high levels of inflation. So let's get into what the government, because we have to remember, this is the government. This is how the government measures inflation. And the fact is that the government is often wrong. And we know that for many cases. So this is the report that came out from the government. Let me enlarge this. So excluding gasoline, the CPI rose 4.3% year over year in January 2022, the fastest pace since the introduction of the index in 1999. I mean, what does that tell you? What does that tell you? It's just, and you have to remember, this is the government's measurements, and the government is measuring this. Remember that it's not the central bank, it's the government that is measuring this. So it's incredibly manipulated. It understates inflation. You can double or triple the number to get the real result. And we'll go over the shadow stats again, which show that alternate inflation using the 1970s, 1980s basket to show you how high inflation really is. And that is really, really important, I think. So in January, prices rose in all major components on a year-over-year basis, with shelter prices up 6.2%, contributing the most to the all items increase. Okay, shelter costs rise at the fastest pace since 1990. Now, the way they calculate shelter costs is a joke. The Owned Accommodation Index, which measures the ongoing costs of home ownership, increased 6.1% year over year in January. On a yearly basis, homeowners' replacement cost plus 13.5%, and other accommodation expenses plus 14%, which includes commission on the sale of real estate, put upward pressure on shelter prices amid rapid price growth in the housing market throughout the pandemic. Conversely, mortgage interest costs fell 6.8% year over year in January, putting downward pressure on the shelter index. So the price for groceries is another one. Year over year, shoppers paid more for groceries as prices for food purchased from stores rose at a faster pace in January 2022, plus 6.5% than in December. These are just ridiculous, these numbers. This is the largest yearly increase since May 2009. What was going on in May 2009? All these dates: 1990, ringing a bell, May 2009, 2008, 2007. It's all what was going on during that time? Was it a great time? Was everyone having a party? Prices for fresh or frozen beef up 13%, frozen chicken 9%, frozen fish 8%, margarine nearly 17%, as well as condiments, spices, and vinegars 12.1% were also up compared with January 2021. Those are insane amounts to be rising. This just shows you how much the index is understating the real inflation that consumers like you and me are paying. So gasoline prices remain elevated year over year. Gasoline prices rose to a lesser extent in January 2022, plus 31.7% compared with December 2021, plus 33.3%. This is because higher prices in January 2021, when gasoline prices rose 6.1% month over month, were used as the basis for the year-over-year comparison, leading to a slowdown. So you can sort of see now, guys, how this isn't accurate and how they use this and it isn't accurate. And you have to remember that I was reading a report and you guys would fall asleep if you read it. It's on the government's website, which is about how they calculate the CPI. It was the most boring thing I've ever read. But it was basically saying all these different indicators they use, and they really believe this. That's first of all what I want to outline. So they really do believe this, and they really have no clue where it's going, and they think they can control it with interest rates. And as you guys may know, I don't believe they can control this with interest rates, at least not at the rates they're going to try and increase them to, which are still going to be net negative rates. Rent prices in British Columbia rose at a faster pace in January 2022, up 4.3% compared with December 2021, plus 3.9%, due in large part to higher rent prices, plus 4.2%. The gain in rent prices was partially attributed to increased demand as more people migrated to the region over the past year. Yeah, I mean, sort of true, I guess, but, you know, just insanity. So first of all, before we go over some of these other things, let me get rid of that. Let's head over to Shadow Stats. Now, I've been on this website before, and I think this website is incredibly important because what it does is it publishes the CPI, but the CPI is based in the 1980s CPI and also the 90s CPI. So you can see how much it understates inflation. But even though it's understating it, it is still it's still a high growth. And you'll see that the charts follow the same trajectory pretty much. It's just the fact that one is lower than the other because it's understating it. They're still accelerating massively. If you look at the chart, if you look at this consumer inflation chart right here, it's still exploding. But if you use the 1980s basket, you're talking 16%. 16%, guys. That is absolutely insane. But that's the reality. So the reality is inflation is increasing that much, whether you want to believe it or not. And it could be even more than that number. Now, it's worth mentioning this is for the US. I don't want to mislead people. This isn't, because Canada, you're never going to find this stuff for. But the same goes, because basically Canada and US are in the same boat. They just have slightly different CPIs. They import stuff through the same ports, and they do the most trade with each other. So the price of the consumer prices are very, very similar in both countries. But if you're above 16% in inflation, how long is that going to be sustained? It's not going to be sustained. It's just not going to be sustained. It will collapse the economy. So the fact is that it's we got a super chat, MK, first ever super chat. Is it possible that housing prices just level off and everything else keeps inflating, or is it a nominal crash in housing prices baked in? Well, basically, in answer to your question, the thing is, housing prices and inflation are not really correlated unless wages are keeping up. Because how can you have housing prices that are going up when wages aren't going up? How are people paying for the extra debt? And the fact is that that's exactly what we've had. Where every time in history where housing prices have exploded away from wages, they correct back to the trend line and often go even further, like Japan. I think there's kind of two scenarios really that could happen in Canada. Well, there's three, because I could always be wrong, and that is one, and I'm definitely going to put that out there. But the thing is, there's two real scenarios. I think either there's going to be a crash, which I think is highly likely due to the amount of debt that was put into the system, into the banking system. That debt is going to put immense stress on the banks when those prices of the homes start to go down. The second thing I think could happen is you get a very slow decline that could happen over 10, 20 years. I mean, if you think about it, guys, if housing prices slide by 4% a year, that's still a lot, over a long period of time. That still works out a lot if it continued at that rate. So I really think there's going to be two things that could possibly happen. You either have this massive crash that happens relatively quickly, and when I say relatively quickly, I'll just explain that, over like 3 to 5 years. But I think you could also see where it's dragged out over 10, 20 years of just very slow declines. But I just struggle to understand, like, it reminds me of in The Big Short. I think it's Michael Burry. And he says something along the lines of, somebody says, you could be wrong. And he says, I could be wrong. It's entirely possible. I just don't know how I could be wrong. Because looking at all the data, looking at all the fundamentals of the housing market, which really is wages. Wages are the fundamental of the housing market. And that is what you really have to pay attention to. Unless wages suddenly start to explode, which they're never going to do, because if they did, the Bank of Canada is going to start increasing interest rates at a way more rapid pace, then I don't know. So yeah, I don't think they'll just level off. I don't think they'll level off. You have to remember as well that the banks rely on this ever expanding credit bubble. So even if they level off, that puts immense stress on the banking system again, because the banks aren't creating money, they're not creating loans, they're not creating debt. And that is how the banks make most of their money here in Canada, is through loans and debt. So for them to level off, that would suggest that people aren't getting into as much debt, and the debt activity is kind of slowed. The velocity is slowing down. But yeah, I don't think that would happen. But so this getting back to this, above 15%, keep that in your mind. And now we're going to move over to this rental chart, because after that video I did today, I'll blow this up. I just want to show you this. This is January 2022 price report from rentals.ca. And it shows you the year over year price growth of rentals. So if you factor in that inflation rate of 16%, look at them. None of them have gone up in real terms. They've all gone down. If you look at places like Ajax, which has seen price of housing has absolutely exploded in places like Ajax and places like Ottawa, you're talking 17% discount on rent in real terms, whereas it's probably an increase of 40-50% in home values in that place. And in real terms, that would be what? It would be still loads, 30-35%, still an amount wages can't support. And if you go down here, I think Victoria was the only one. So Niagara Falls, Ontario, Eric, if you're watching, 15% year over year growth in rents. But that would be around about where inflation is. So break even. But that just goes to show you how insane this inflation amount really is, and why it's not going to be sustained is because, again, wages cannot support this. They can't support this high level of inflation either. So it's going to lead to businesses collapsing because they can't raise the prices, because the consumers aren't going to buy. People are just going to tighten their belts like I've already been doing for the past year. They're not going to spend so much. And it is just insane. You go down here, Gatineau in Quebec. I think that's the only one. I thought Victoria, maybe that was last month's report. But yeah, look at, I mean, the year over year, there's only one that's really above that 16%, and it's Gatineau in Quebec. So that just goes to show you rents in real terms are going down, whether you believe it or not. I don't believe that government CPI at all. So let's scoot on over now and get rid of this. And I want to go actually, what else we got on here? The melt up. That's what I wanted to go through. So I think what's happening right now, I'll zoom this in, is a melt up. And we'll go through what a melt up is. A melt up is a sustained and often unexpected improvement in the investment performance of an asset class or asset class, driven partly by a stampede of investors who don't want to miss out on its rise, rather than by fundamental improvements in the economy. It's very true today. Gains that a melt up creates are considered to be unreliable indicators of the direction the market is ultimately headed. Melt ups often precede meltdowns. So, yeah, I mean, a melt up is a sudden, persistent rise in the price of a security or market, often due to investor herding. Melt ups are not necessarily indicative of a fundamental shift and may reflect market psychology instead. Poor decisions to buy into a melt up can be avoided by focusing on economic indicators that provide an overall picture of the health of the US economy or the fundamentals of the stock, whatever asset class you're looking in here. So that is really, really interesting. And here's some examples of a melt up. So financial analysts saw the run up in the stock market in the early 2010 as a possible melt up because of unemployment rates continue to be high, residential and commercial real estate values continue to suffer, and retail investors continue to take money out of stocks. More examples of melt ups occurred during the Great Depression when the stock market rose and fell several times despite a generally weak economy, according to research by wealth managers. Stocks fell by more than 80% between 1929 and 1932, but they posted returns of more than 90% in July and August of 1932, and the trend continued over the next 6 months. So I think that's really what we're going through, because the economy is deteriorating, yet you've still got this house price growth, yet nothing has really happened on the rate front, but fixed rates are going up. So fixed rates are rising, and we are going to see the impacts over that probably over the next couple of months. It's probably just going to push more people down the plug hole into variable rates, but it's just kind of insane. So what else have I got up here? So I think the last thing actually that I wanted to go through was, well, actually, I'll just show you this tweet real quick. So basically, this was from the FOMC meeting that the Fed had in the US today. And Powell said that there's quite a bit of room to raise rates. And I put, what planet is he on? Because there's no room to raise rates. Raising rates is just going to make the situation in the economy even worse. They're going to do it nevertheless. And that's mainly because people want them to raise rates, because the perception is they're doing nothing. The perception is the politicians are doing nothing. It's like today, everything that's going on in politics in Canada, there's barely any mention of the inflation being at a 30-year high. And it's almost like it's a smokescreen to deflect you away from what's really going on. So with that melt up in mind, and with everything that's going on in the Ponzi economy in mind, let's go over to some stories now, which you're going to want to hear. And I've got to figure out how I'm going to do this now, so bear with me. Let's stop the screen share. Now, I've copied these from emails into a Word document, and that's to protect the identity of the people that sent me these notes. I don't want them getting in trouble. And yeah, if you send me a story, I will always protect your identity unless you specifically ask me to share. And one of these people specifically asked me not to share that. So what I'm going to do is share this Word document. Window, stories, share. All right. That is pretty small, isn't it? Still pretty small. I need to make it bigger. Oh, it's down here. It shows how much I use Word. I think I need to go like this. So this is really a story of the new builds and what's happening. And it came in today, and it made me think of another story that's going on. And I forgot to mention this in one of my videos from December, a guy in Nova Scotia. So let's get into this story. Yay, story time, Gloria says. Yeah, it's going to be, these stories are going to be very, very funny. I'm going to tell you that. So, well, not funny, not, I should be clear, not funny in a good way. I have been listening to your podcast and YouTube videos for a while now, and I love the content. Seriously, thank you for the true content you're realizing. I'm a HVAC apprentice from the Burlington area and felt you may appreciate a bit of insight, which I certainly did. Thank you so much. So first off, the horrible construction on new builds. Just let's bear in mind the price of these builds out in Burlington. You're talking probably near 2 million for a detached property there. $2 million. Okay. So with that in mind, let's talk about now what's going on with the construction and the new builds. First off, the horrible construction on new builds. You mentioned in a podcast that you lived in Milton for a bit and that you noticed the horribly built homes. I know people that have bought these properties. The windows and roof need replacing soon after the home is built, little after 5 years. Fantastic construction, really worth $2 million. Because of the builder's grade material, keep in mind those people bought the home 15 years ago. I couldn't imagine those extra expenses now. Also, as you mentioned, the quality of the structure is trash. It's basically IKEA furniture in the shape of a house. Oh God, that is just fantastic. I work with a fellow apprentice and he used to be a labourer at a new subdivision in Burlington. FYI, Burlington is NIMBY paradise. That's not in my backyard for anybody that doesn't know. So people who don't want building subdivisions going on in their neighborhood, they're like basically, yeah, we need to build loads of homes. Just don't build them anywhere near me though. People here use the Niagara Escarpment as leverage to raise home prices through the lowering of local supply. Regardless, the labourer was on this site where homes over 2 years ago were going for around $1 million. Here's the kicker. At a few homes he was at, the roof wasn't finished and water soaked all the plywood for the flooring. Since these people didn't pay enough money, I guess, kidding, the builder proceeded to add the tile to the bathrooms and kitchens, even though the floor was soaked. Talk about quality builders. I suppose they needed to pay extra for no black mold. It's just absolutely insane, isn't it? The main reason I'm making this email is because another co-worker I have is a homeowner. He bought it over 5 years ago and has a lot of equity like many people. He recently used his home as leverage to buy a new build condo and hopes to make 50% appreciation by the time it's built in 2025 and sell it. I actually like the people I work with, but this is insane. When I politely asked about a scenario about rising interest rates, he said something along the lines of, so many people have crazy mortgages now. If they raise rates, those people would be screwed, aka that man now. We're truly in a mania where when average tradesmen are acting like they have the market figured out. Yeah, it's like the shoe shine boy in the stock market. It's that type of thing where you've got basically everybody and their uncle who is getting into the market and they're going into invest in real estate, as you're going to see in the next story that I'm going to share as well. So, I mean, we've been talking about this for a while on this channel, which is people leveraging their home equity to buy more homes. It is so dangerous. People, do you think the banks are really telling them the risks that they're taking? I mean, they probably don't even have to go to the bank. They probably just simply can all do it online or very limited. So they're not even being advised of the risks. The risks are that if this backfires, if his plan backfires, he could not just end up losing that condo, but lose his own home as well. And this is what I talk about when I'm talking about how the housing market is essentially like dominoes, where essentially because you have so many people doing this, leveraging their home equity, using their home equity like a cash machine, your home equity, you should never be leveraging that, especially, I mean, even if you are going to leverage that, leveraging it at the top of a market in the hopes that it goes higher is just insane. I mean, that's like buying a stock and then hoping that it goes up 50% when it's at all-time highs, when you know the likelihood is minimum it's going to correct. So because of people doing stuff like this will lead to panic. This will lead to absolute panic at some point when people realize what a mistake they've made. And that will be when prices start to reverse. People start to look into the finer details of what they've done. They realize they've made a massive mistake. And then essentially they are like, holy, I've got to pull the plug on this. And everybody runs to the door at the same time. And at this door, only one can go in and one can go out, and they're all rushing to get through. And it causes prices to accelerate down. And to the person who said about prices flatlining, this is what makes me think that it's sort of impossible to a certain extent, because people are expecting this insane appreciation to happen. And yeah, and people aren't buying like true real estate investors. I want to make this clear. I am pro real estate. Investing in real estate is a good thing, in my opinion, but not in markets like this, not in circumstances like this. So people who accuse me and say you're anti-real estate, you're just a burnt out renter, I could afford to buy, but I'm not buying, because I know there are countries where I could invest my money, get a better return than Canada, and also the taxes as well, which we're going to do in future videos when that becomes more of an issue, but that's going to be way down the line. But my prediction is once this all plays out, the government is going to come in heavy-fisted to tax the heck out of property sales, unrealized gains through home equity, things like that. So I think that's going to come because they've got to pay for all the money they've wasted. So what's going on? There are so many factors, but Luke hit a great point. If wages don't go up, then how will people be able to pay their mortgages? Plus, look at the state of Canada with Emergency Act and governmental. It's very true. Like, wages are the ultimate thing that underpins the housing market. But in times like this of mania, when people are taking out leverage left, right, and center, the funny thing is the banks are more willing to lend to people when the market is going up. So as the market picks up momentum, the banks become more and more flexible with their lending criteria. And it's the opposite effect when the market goes down. They become more and more suspicious and they tighten up their lending. They scrutinize applications even more. And this compounds the fact of prices going up, but prices coming back down as well. So it's incredibly important. But yeah, Kevin, over 10% of our GDP is residential real estate. Exactly. And, you know, the Bank of Canada just revised something. I think it was last month or this month. And it was January. It was last month. And they revised their forecast for GDP because they were citing that residential investment portion of the GDP was going to slow because of their rate rises, obviously. But thank you so much for sending this in. And then we're going to go into this other one right now. And this is really a sign of the times as well, guys. I mean, this is really a sign of the times when you start to see stuff like this happening in small markets like this. It's just such a sign of the times. So here we go. So 2021 December, this is when I got this. Hey, thanks for responding. I work and now I blank that out just so that to protect the person's identity in Nova Scotia. To be honest, I actually wasn't all that worried about the current financial situation until this year. I'm in a position in which I hear people talk all day. Prior to the 2020-21, I never heard anybody speak of finance unless it involved fishing. I live in a village where over half the population works in the fishing industry, so people often get involved with business related to that industry, which makes sense. That makes sense. This year, I've heard people tell me that they've taken out loans for common stock, bought rental property with help from friends or family, because real estate always goes up, in brackets and in quotation marks, and speculated heavily in the crypto space. Never once had I ever heard about stocks from any one of my clients, and I would be willing to bet that the majority have never owned stocks or ETFs. This is exactly the signs of the time. What is particularly noteworthy is that house prices where I live have been extremely low for the past decade plus. What has been happening is that people have been moving here from places like Ontario and BC, and they have been bidding up houses hundreds of thousands of dollars, which is making it unaffordable for many people here. Now, what I want to point out here is he touches on a fantastic point here, which is that it makes it unaffordable for people who live there. People who earn a wage there. And this is what I want to really think about here, because this is what I mean, where in these small markets, which have essentially been turned into penny stocks like this, because I mean, guys, like the GTA, BC, the populations are large. So it takes a tiny, tiny amount. I mean, I'll put it into context. Like if you've got the GTA and then you just have a really small minority of people that suddenly wants to move to Brantford in Ontario, which is a small town, household income I think is around 70,000. Like it's not that high. Then housing prices are going to explode because they will just deplete the inventory so quickly. And you have to remember, these people coming from Ontario, coming from the GTA, they only know hot markets. So when they're fighting with each other in the stupidest battle of all time, where you've got idiots fighting other idiots, bidding up the prices over each other. And then all of a sudden, eventually this is going to stop. Eventually, the housing market is going to have to rely on the fundamentals, which is the people that live there. This has happened in Vancouver Island. It's happened in rural BC. It's happened in rural Alberta to an extent. It's happened in Ontario, Nova Scotia, New Brunswick, all over the place. Many states in the US, the same thing as well, because it's drive from the suburbs. So if you imagine that, they're never going to be able to afford these prices. So the prices are going to have to come down because nobody is going to be able to afford them. So, I mean, this is exactly how a penny stock works. You have a pump, which is usually a high amount of volume. So that's all those buyers coming in from Ontario, a volume spike. Because the liquidity is low, it sends the price up massively. And the liquidity could also be the inventory. And then basically what happens? The dump happens. Because then people see the price, they think, no way, look at this, it's appreciated that much quickly. The price doesn't rely on fundamentals anymore. But locals do get caught as collateral damage, just as penny stock pump and dump schemes do, especially in crypto, because they see the pump, then they buy thinking it's just going to go up and up and up and up. They bid it up even more, and then they dump on all those people. But the dump is really just going to be it going back to the fundamentals of the market. I mean, do you really think that BlackRock is looking to buy in this fishing town? Do you really think that major real estate investors are going to these small, tiny towns and they're looking to invest in properties there? It's just not happening. The investors are the people coming from Ontario and BC who only believe prices go up. And this is further evidence. All right. I totally forgot where I was now. Last month, a new client of mine from Ontario told me that she was not sure if she was going to be able to stay here long due to the lack of things to do and being almost 4 hours from Halifax Airport. I'm going to put my thing there. Again, guys, this is another example. The people aren't researching these things. People aren't looking into the finer details, the nuances. All they're doing is looking at prices are really cheap there. It looks like a nice place. Let's just buy a house there. And I've heard as well from people in Nova Scotia I heard from a mortgage broker. I should get that story up for next time, but I want to verify with him that that's okay first. But the mortgage broker said that he's had several transactions, and this never happened before 2020, just to put that out there. Several transactions, people from Ontario buying homes, they'd never seen them, never visited the area before, but were moving there. I mean, that's the most ludicrous thing I've ever heard. And this is what happens in a mania. You know, I struggle to get my head around it. I'm never going to be able to get my head around it because I can never understand the lunacy that goes on in people's heads. But I mean, FOMO is particularly strong, and I know how strong FOMO can be because I had to battle with that like crazy when I was learning to trade years ago. And FOMO is a powerful force that anybody can get susceptible to. You know, even me at this time, like, you know, you can get FOMO. Anybody can get FOMO, but you just have to be aware. You just have to look at the fundamentals. That's really how you figure out whether the price is a price that's supported by the market or not supported by the market, whether it's high compared to whether it was or low. And that's how you figure out whether it's worth buying. So, however, she knew that she will be able to make $30,000 or $40,000 on the sale of her house when she sells, so she is not too worried. Again, like comforted by this notion that housing prices, they only go up. So, I mean, just insane. This is interesting because people from Ontario and BC just assume that all markets or that all real estate markets are the same and you can just turn around and sell a property at profit. Totally agree, because I've been saying this in Alberta as well, because people are moving here as well because they see the prices lower and they think, let's go there. But the funny thing is, like, again, they're just assuming prices go up. And I've heard so many stories since I've been in Alberta of people that got screwed over in 2008, in 2016, when prices went down massively. People who moved here and then couldn't escape. They were essentially in negative equity. They couldn't sell their house. And then, you know, that just causes them to get burnt out about the place, hate the place. But that is, it's just assuming that these markets are all going to go up is just a recipe for disaster. And that's exactly what's going on. And then he puts this story in, which really just puts the icing on the cake for me. My parents live not too far from where I live and work, and they had their home on the market for 6 years. 6 years. Before they decided to take it off the market and just retire here. So they didn't even sell it. They had it on the market for 6 years. They didn't even sell it. Anyway, I found your story interesting. If you're ever interested in reading that, the IMF article on bail-ins, page 12, has a very chilling section. It reads, so bail-ins, for those of you that don't know, are effectively when the bank can use funds from its depositors to bail itself out in the event of a financial crisis. So we'll read this, what he's put here, because I think it's an important part. The need for a quick and decisive action in the interest of financial stability pleads against incorporating a procedure for creditor approval in the bail-in framework, even though such approval is typical when debt restructurings are implemented in the context of corporate insolvency. However, care should be taken to ensure that eliminating creditor consent will survive legal challenge in the relevant jurisdiction and will not undermine the ability to achieve cross-border recognition of bail-ins as an appropriate insolvency or reorganization proceeding. Anyway, I would like to sign up for the newsletter. I look forward. Yeah. So basically, this is just kind of these two stories. I mean, what do you guys think of what's going on? Let's have a look in the chat here. One of my bosses lost 50K from it in 2015 from his house in Alberta. Yeah, I mean, prices do not just only go up. And this is the thing. There's this mentality here that prices only go up. And if you want my 2 cents on why prices haven't gone up so much in Alberta and Saskatchewan, it really comes down to 2015 and 2016. You got to think about, like, markets are irrational. They don't always operate on fundamentals, as we're seeing play out right in front of us. So with that in mind, psychology plays a huge part in what goes on in a market. And the funny thing is, if you think about Calgary, what happened was very recent. That housing price decline that happened in 2016, 2015, whenever it was quite recent. So people have that in their memory bank, and they know that prices don't always go up. And that is exactly why I believe that prices haven't appreciated to the extent that they have everywhere else. That's the only reason, really, because I mean, we've seen similar dynamics in the market. And it's been interesting because Calgary is a market I've tracked closely because I live here, I'm local, so I can go and see what's really going on. I can go and speak to builders. And, you know, when you look at other markets, it's really took the same course as most markets have in Canada. Low inventory and everything like that. Massive amounts of demand. But the price appreciation hasn't been so high. But why hasn't it been so high? And that is really what I believe the reason is because people have it fresh in their memory that housing prices don't always go up. They know that housing prices stagnated from 2008 to pretty much this day in Calgary. That doesn't mean they're still not overvalued, though. that's another thing that people seem to forget. So it is. I mean, the way I relate it, and I've said this before and I'll say it again, is basically housing prices, when you really think about it, and when you think about the labor market, the job market, unemployment rates, corporate debt, everything like that that's going on, we had a perfect window into what's coming for the economy. And that window was in 2020 when everything went downhill. And it was the unemployment rates that were happening across Canada. And basically, when the unemployment rates, I should really get them up, but we'll do it in a different video. But some of the top places for unemployment, Toronto, Calgary, that shows you the weakness in the corporate debt market. Because what happened in 2020 was what? Credit conditions changed. It was very temporary, but credit conditions changed. And then they had to put an unbelievable amount of stimulus into the economy to create a change in the credit conditions. Could they do the same now? No, because of inflation. They could not do the same now. So don't kid yourself that the government is going to come running and bail everybody out, because I don't think so. They might be bailing. They will be bailing out the banks when the banks have issues, but they're not going to have the money to put loads of stimulus into the economy. Because in my head, just doing what they're doing now is a significant risk. So even if they bail the banks out, there's a significant risk to the currency. And that's what I really believe. And we can go into currency diversification in a different video, but let's sort of end the day here and look at what else we got on going in here. I was just going to scoot over to the markets and show you how the reaction has been to the inflation in the currency. Again, incredibly volatile. We need to keep an eye on what's happening in the currency. So let me bring that up. Slides. No, I don't have slides. This is not a PowerPoint. Window, tab, Yahoo Finance, share. Okay, here we go. So now you can see that better. So if we go over to the Canadian dollar, it's sat at recent highs. And today you had kind of a spike up when the inflation data came out, and then it came back down. Every time there's any sort of spike on the Canadian dollar at the moment, it gets sold back down. And it seems like there's somebody selling it pretty bad. So who knows what's going on there? But you have to remember the Forex market is gigantic and it's global and it's not controlled by the government. So it's an incredibly interesting market to look at. Another thing was oil went down. You know, it was incredibly interesting day. We had bonds and yields pretty much flat. Canadian bonds just following American bonds pretty much. Gold and silver, though, were up. And I think gold is still up. Let's have a look. If you look at gold, it started around 8.15 on the month. It's up at 8.17 at the moment. Look where it is 6 months. It's right at the highs right now. So it's probably going to pull back because that's what markets do when they get to highs. But it's at highs right now. And I think that is kind of to do with the Russia thing. But I also think it's to do with the fact investors are also pricing in that inflation is a massive risk to the economy, and that they might be realizing that the Fed, the Bank of Canada, the Bank of England, they got their backs up against the wall. They're going to be unable to do anything about it. I don't know what the markets are doing right now. Down, the futures down, crypto flat. Again, the Canadian dollar is being gained on by the pound. So it's incredibly interesting times, guys, in terms of everything that's going on right now. That's exactly why I'm doing all these streams. Screw millennials that just want to simply what else we got? Shopify down 17% today and down 15% since Christmas. Why is that? Because they have loads of debt, and because debt costs are rising, whether interest rates go up or not, the costs of debt are rising. They've been on the rise, and that's really why these tech stocks are getting battered. And even a lot of them are still holding up, like Tesla, in my opinion, will probably be one of the last to fall. And Tesla is still holding up. If you look where it is on a yearly basis, it's still, even though it's come off the highs quite a lot, it's still just so overvalued when you look at it on the 5-year. Whereas Shopify is, that has come down a lot. They missed on earnings as well today, I saw. But if we look at the 5-year, looks like a pump and dump scheme. So it's absolutely insane. It looks like a pump and dump scheme. But it's a pump and dump scheme that happened from 2020 to 2022 pretty much. So from a long-term view. But one thing I want to show you is gasoline futures, because where they've been recently is just absolutely insane. So I think if we go out, so if we zoom out, the gasoline futures are at the highest like since around 2014 since 2008, that sort of time. But think about all the extra taxes that are in there. That's why the gasoline is so expensive. Bank of Canada deputy signals officials on track for March hike. A Bank of Canada deputy may have signaled the central bank is, oh God, they love to speculate about all this stuff. Talking after Tim Lane was asked about the potential timeline for reducing the central bank's balance sheet, the Bank of Canada would consider it once it starts to raise interest rates. That's interesting. That means QT, the opposite of QE. So just remember that they're talking about QT. We're going to certainly consider starting that process fairly quickly. We'll be doing that soon as we're starting to raise rates. He said, quite likely we'll be saying something about that in a couple of weeks' time when we're actually at the stage of changing when we're actually at our next decision. Oh, so it looks like he sort of gave something away there, maybe, who knows. But anyway, let's go through what's going on the chat. Anything that anybody wants to say, throw it in the chat. Many are going to get hurt. Trent says, many are going to get hurt. I've been around the block and seen it 3 times. So sad. Yeah, I was talking to my dad about this. You know, I was saying it's kind of hard not to feel sorry for people because they get duped into this time and time again. And really, for a lot of these people, there is a lot of people that are taking crazy risks, like we saw in today's stories. But there are also a lot of people that are led down the garden path by mortgage brokers and realtors that are just driven by their hunger to get their commission check. They don't really care about that customer, and they would be acting very differently if their their paycheck did not depend on them selling whatever product, be it a mortgage or a house. So it is very, very, very sad. Luke, have you bailed out of tech stocks? I've been out of tech stocks for a long time. I'm never big in tech stocks anyway. I never have been because, you know, I prefer stocks that at least pay a dividend. I do hold stocks that don't, though. But tech stocks make a small proportion of my portfolio, or did make a small proportion of my portfolio before last year, where I got rid of them. And that was around August, July time, I think it was, or even before that. I'm trying to remember. Anyway, it was last year. And there could have been way more room for gains. And believe me, I wasn't big in tech anyway. I only had about 15% of my portfolio in these growth tech stocks. And they weren't in the stocks. They were just in the NASDAQ and the S&P 500. And the S&P 500 has sort of follows the NASDAQ now because it's so overvalued. So yeah, I sold those ETFs back then. And I am not getting back into them. And that was so I could sleep better at night, because it is just absolute insanity right now. Shopify should buy a house in Skunk. Invest in gold just in case currency tanks. Yeah, Gloria, you know, spot on there. Like, this isn't financial advice. Do your own due diligence, but I hold gold because it's an insurance policy. It's an insurance policy on the money you have denominated in Canadian dollars. I've said this before. It's not an inflation hedge for me. It's an insurance policy, because if the Canadian dollar tanks, the value of gold versus the dollar will go through to the moon, essentially. So that's why I hold it. You don't have to hold the same amount. That's the thing. You weight it based on how much cash you have and everything like that. You have to do your own homework on it. There's great people that you can listen to. Lynette Zhang is very good. She talks a lot about gold. But yeah, like it's not an inflation hedge to me, but yeah, it's an insurance policy. In my opinion, don't store it at your house unless you have a really safe place. I've got it in a storage. It's not a vault or anything like that, but it's insured in a storage. It's just a storage place we've got for other stuff as well. So, and it's in a safe within that storage thing. So put your gold somewhere safe, because as the value of gold goes up, criminals are looking for gold. They know the value of gold. They know they can get cash for it. So the first place they're going is looking for precious metals, and they're going to look in your bedroom. They're going to look for a safe. So be very smart about where you put your gold. I guess you can conceal it. I've heard of people putting it in furniture and stuff like that, in the wall of their house or whatever. I mean, you can't do that if you're in a rental property like us. I've heard of people putting it in ammo containers and sticking it in the ground in their backyard. So there's lots of options, whatever you feel comfortable with. Personally, I just can't feel comfortable like putting it in a hole in the ground in your garden, and then like just knowing that there's that amount of money out there. I mean, I suppose it depends on how much gold you have. But you know what? Even at the price, I never thought that I would be continually buying gold throughout last year, but I did, even despite the high prices. And I continue to buy silver and gold to this day, because I just think it's incredibly important personally, but it's not financial advice. Didn't Trump start a big project of getting computer chip manufacturing in the US? It'll be another 5 years until the factory is online, last I heard. But yeah, I don't know. I don't know about that. Holding gold is useless. I mean, each to their own. Like, you can say whatever, invest in gold miners. Well, yeah, but then what happens if the US dollar goes to pot as well? Or it just goes down in value a lot, you know? You have to kind of think about this. And that could be as the result of a banking crisis, where you've got banks getting out of positions in the stock market to raise cash. So stocks are going down, even though the fundamentals for them are going up. This happens a lot in financial markets. As everybody knows, financial markets are incredibly manipulated, and oil is a classic example of that. Oil went down in 2008 because of the financial crisis. It didn't go down because of supply issues, and the same will be the case when the crisis hits this time. Gold has a 4,000-year-old history as a store of wealth. Yeah, I mean, exactly. It's been silver and gold have been used since the Egyptian times. It's not going to stop being a store of value anytime soon. Having gold miners, though, I own a lot of gold miners, and yeah, I mean, I don't say that's a bad thing. Again, not financial advice. I'm not buying them at today's prices. I was in before these prices. So, and you've really got to be, it comes down to everything, guys. When you really think of psychology and how to invest, it's just got to be something which nobody's paying attention to, nobody's talking about. It's cheap in comparison to where it's been, and you're not trying to guess the bottom, but you know that it's undervalued because you've researched into it enough. You have that. You've looked at the arguments for it going down, going up. You feel as though you've done your homework and due diligence. Then you look at the price compared to where it's been in the past. Is it cheap? Is it expensive? You look at the sentiment. Is there a lot of hype on social media? Is there a lot of hype in the news? And you figure out what is really going on. And that's why I would never invest in crypto, right? Even if I thought it was a good thing right now, is because like this, they were, again, it's like Peter Schiff said on his podcast, they were going to be advertising heavily at the Super Bowl. They were advertising heavily at the Super Bowl. So was pets.com back in the .com bubble. And pets.com went bust, incredibly overvalued stock. So you have to really just make sure that whatever you're looking to invest in it, be it real estate, be it stocks, whatever sector it is, that it's a sector that people just aren't, rushing into. And that's exactly like real estate right now. Like every guy and their uncle, laborers, you name it, all these people getting into real estate investing, that puts me off. Just that on its own puts me off. Like I would never get into a market like that. And that has protected me very well, I think, just doing that. So you have to kind of weigh it all up and figure it out. What are you most comfortable with? And at the end of the day, that's how you'll make good decisions. Justin likes Ellis, his hand permanently in your back pocket. Invest in the railways. They aren't going anywhere. Pipeline. Same, I don't agree with crypto too much. Hype. Yeah, Gloria, I mean, crypto is just in a big bubble, I believe. But anyway, guys, I'll love you and leave you all. Thank you for joining me for this stream. It's been an honor and a privilege to be here with you, as always. And let me know in the comments what other streams you find interesting. I'm thinking about doing a stream this weekend instead of a video. Let me know if you think that's a good idea. I'm thinking of, instead of doing like the informal video I've been doing and then the whiteboard video on Wednesday, what I was thinking of doing is like a little bit different, coming on a live stream, but we just go through we go on realtor.ca. We also look at rents and we look at the gap because it is so huge, and we go through that. So let me know if that's something that you would be interested in. Anyway, guys, have a fantastic evening. Please hit that like button if you haven't done so already. More people will see this show up in their feed. And thank you for everyone in the chat. Thanks, Gloria, Kevin, G, Ellis, Trent, all you guys being here. Thank you so much. And I'll see you